Welcome to This Explainer. Today, we're taking a look under the hood of Origin Agritech's H1 FY2026 financial results. Now, if you've ever dug through an SEC-style filing, you know they can be incredibly dense, dry, and packed with numbers that honestly seem to contradict each other sometimes. But our goal here is to translate all that dense data into a clear, compelling business narrative. And let me tell you, Origin Agritech's latest report tells a phenomenal story of a company going through a massive, really high-stakes transformation. But before we even get into the weeds, we have to address this massive, glaring paradox hidden right at the top of their income statement. Just think about this for a second. Usually, if a business loses a third of its sales, the bottom line just falls right off a cliff. But here, revenue is way down, yet their operating loss actually improved by nearly 50%. How on earth is that possible? Is it some weird accounting trick, smoke and mirrors? Nope. It's actually the result of a very deliberate, aggressive change in how they run their entire business. To solve this mystery, we're going to break this explainer down into 5 key parts: the strategic seed pivot, the revenue drop versus narrowing losses, shifting the expense strategy, inventory and the balance sheet, and finally, lawsuits and future risks.
Okay, part 1, the strategic seed pivot.
Pulling directly from the company's unaudited financials for the first half of fiscal year 2026, we see a business that is basically undergoing a total operational overhaul. And when you read the management commentary, they aren't hiding from these changes at all. They're leaning right into them. They are effectively hitting the reset button on where their cash comes from. So here's what's actually happening. The core of this story is a deliberate pivot away from providing external seed tolling services. They want to go all in on selling their own newly developed proprietary corn seeds. For those who might not be in the weeds on this, seed tolling is basically acting as a contractor. You're processing or growing seeds for other companies. Sure, it brings in steady revenue, but the margins are famously thin, and at the end of the day, you don't even own the intellectual property. So Origin Agritech decided to step back from that contractor role. They want to be the main act, betting their entire future on the seeds they've developed in-house.
Moving on to part 2, revenue drops, losses narrow, the financial paradox.
Because they are intentionally walking away from that tolling business, their net revenue took a pretty huge hit. It fell 32%, dropping from 72.3 million RMB in the first half of last year down to just 49.2 million RMB this year. Now, if you only looked at the top line, you'd probably panic. Giving up guaranteed contractor money leaves a pretty massive dent in the cash coming through the door. But here's the real kicker. Despite that huge drop in sales, their total operating loss actually improved by almost 48%. They dropped from a 24.7 million RMB operating loss last year all the way down to just a 12.9 million RMB loss this year. They literally cut their losses in half while losing a third of their revenue. That is a fascinating dynamic. What it tells us is that the revenue they gave up, that tolling revenue, was highly inefficient. It means they've made some incredibly drastic changes under the hood to how they spend their money. Which brings us nicely to part 3, shifting the expense strategy, trimming the fat to fund sales. Honestly, this is the smoking gun for their new strategy right here. They slashed general and administrative costs by a staggering 70%, bringing it down from 25 million to just 7.6 million RMB. They completely gutted their administrative overhead. But they didn't just pocket those savings, they weaponized them. They simultaneously surged their sales and marketing spend by a massive 93%, bumping it up to 5.1 million RMB. And that makes total sense. If you're going to stop being a contractor and start selling your own proprietary corn seeds, you need feet on the street. You have to expand your sales force and aggressively market those new products. At the same time, they're not taking their eye off the future. They bumped research and development up 11% to 5.7 million RMB. If your entire business model now relies on selling proprietary high-tech seeds, you simply cannot afford to let your product pipeline dry up. You have to keep innovating. Looking at the whole picture here, out of their 18.4 million RMB in total operating expenses, you can clearly see a newly balanced, highly targeted focus. Keep the lights on, build new products, and sell those products. It's a massive, healthy shift from last year, where administrative bloat was just eating up the vast majority of their cash. They have fundamentally rewired their cost structure to support this pivot. On to part 4, inventory and balance sheet, stockpiling for the future. You don't just see this pivot on the income statement. You can physically see it sitting in their warehouses. Look at the massive 72% jump in overall inventory over just 6 months. And pay attention to where that jump is coming from. Finished goods.
That category exploded from just over half a million RMB to a staggering 14.2 million RMB. They are stockpiling their new proprietary seeds, getting totally geared up for the planting season. This is the physical manifestation of their bet. The product is built, it's sitting in bags, and it's waiting for that expanded sales team to move it out the door.
However, we need a reality check because the balance sheet is showing some extreme vulnerability. While their operations are lean and their inventory is packed, their liquidity is incredibly tight. They only have 13.4 million RMB in cash and cash equivalents. But look at the other side of the ledger. They have an eye-watering 155.6 million RMB in current liabilities, meaning debts and obligations that are due within the next year. That is a terrifying gap. They absolutely need those stockpiled seeds to translate into cash, and they need it to happen fast.
And that leads us perfectly into Part 5, Lawsuits and Future Risks. First off, there is a significant legal shadow looming over them right now. A patent infringement lawsuit regarding their Liu 16 seed hit their subsidiary with an initial 3 million RMB judgment. Now they've appealed it, and they're waiting on a crucial second trial decision from the Supreme People's Court. But in the meantime, that 3 million RMB just sits there as an accrued liability. In an environment where cash is already this tight, an unexpected legal payout is literally the worst-case scenario.
Furthermore, we have to ask who is actually funding this gap right now. Well, they are carrying significant related party debt, owing 26.1 million RMB to related entities. What's wild is that 13.9 million of that is owed directly to their own shareholders. And these aren't comfortable long-term notes either. The filings show a large chunk of these are unsecured, interest-bearing loans that are repayable on demand. So management better be incredibly nice to their investors right now because the company is relying heavily on the patience and the deep pockets of its own insiders to keep the lights on. So what does all this mean? The strategic pivot is completely underway. Origin Agritech has gutted their administrative bloat, they've walked away from the low-margin tolling business, and they've stacked their warehouses to the absolute ceiling with new proprietary corn seeds. But with cash burning low and massive short-term debt staring them down, it is a literal race against the clock. Will their brand new sales force be able to move those stockpiled seeds and generate cash fast enough to outrun the debt? It is a high-stakes agricultural gamble for sure. Will this bold pivot actually yield the harvest they need to survive?